Remember, today is the tomorrow you worried about yesterday.
Wanting to ensure banks that handle crypto for custody or exchange purposes is no longer a blocker. The Federal Reserve has now opened the door to non-FDIC insured institutions to get access to the payment system. And so the real impact of all this, the aha moment is we can now actually have US dollar clearing simultaneously with Bitcoin, Ether, other digital assets.
The Federal Reserve has opened a 60-day comment period for new regulations. They intend to open the Fed to smaller banks. As of now, the smaller banks had to go through larger banks to reach the Fed. The Fed is positioning itself for a more open platform. If these regulations pass, the smaller institutions will have a direct line with the Fed. That means the monopoly of the too big to fails is being broken. How will they do this in a secure manner? With a blockchain-based platform.
When a person tells you they want a walled garden and you can't convince them that they want something that's open, what you do is you build them a walled garden, but you make it very easy to take the walls down. You make the walls just very porous. And so these private ledgers would be completely operated by their counterparties. Like if the Federal Reserve adopted the system, the Federal Reserve would operate a ledger. If something went wrong, they could shut it off. They could rewind it to the past. They can do whatever they want on it. But two things happen. So first of all, what's going to happen is there are going to be people who are inside and outside the walled garden, and they'll be able to make money sort of by arbitrage by the fact that they have access to both systems. This is kind of one of the things that banks do today. Like you can't make a wire transfer without a bank. And so banks can charge you for a wire transfer. And essentially what they're charging for is access to a system that you don't have access to. And so what will happen is like if there's the more people who have access to that inside system, the lower that cost difference will go. If I can go to many, many different places to do that, then the amount that they can charge will go down. And at some point, people will realize that the walls just aren't facilitating anything. What I hope will happen is that like as these systems prove themselves and demonstrate their reliability, that the operators will allow other assets to sit on those ledgers because there's no reason to prevent their account holders from holding them. Like, there's no reason why you wouldn't want to let people use XRP on your system, because then they would get the benefit of being able to provide liquidity between those assets right on a single ledger.
We have heard a lot from Ripple about private ledgers and central bank digital currencies recently. In this interview that was filmed over a month ago, David was describing a scenario that now the Fed is positioning for. Is this just a coincidence? How does Ripple have such vivid insight to the Fed's needs? The private ledger solution David is presenting sounds like a perfect match for the payment proposal that the Fed has opened for a comment period.
In Fed speak, for those who are watching, I've been told from Fed watchers, 60 days is fast. The Federal Reserve really wants to do something here.
The Federal Reserve really wants to do something, and they're moving fast.
That's the spin. That's, of course, the spin. We're not in a rush. We want to do it right because they have the same problem like the ECB with all the commercial banks who don't like this. But if you look at the US, I think it was in 2020, we had this new banking act. You know, it's a law. And the new banking act, you can Google it and find it online. It talks about digital wallets, digital dollars. So behind the scenes, it's the same as in Europe. Central bankers working very hard to create this digital dollar, like the digital euro. And one day they will say, we're ready now and we can start promoting it to the general public. And maybe one day we'll get a message that we can download the digital wallet from the Google App Store. But of course, a lot of work has to be done. China has proven that it can be done. China is a few years ahead. But as said, I expect all Western central bank to be able to roll out these new digital currencies within 3 to 5 years, and maybe even sooner.
They're not in a rush. They have the same problem like the ECB with the commercial banks. The commercial banks and the banking dynasties are doing everything in their power to keep the monopoly going. But there is a problem: the debt. The systems will fail if they continue fractional reserve lending. For every $10 the commercial banks have, they can lend 100. The Fed, with digital currencies hopefully built on the XRP ledger, will be able to control monetary policy with surgical precision. Inflation, deflation, velocity, everything will be in their power. When the Fed prints money, it goes right to the commercial banks and they buy assets with that money. The real economy is suffering while our stock market is at record highs. If the Fed had a direct line to the small banks, they would be able to stimulate the real economy with a fraction of the debt or inflation.
I think there's also an interesting application in the context of monetary policy. So if we accept that at the moment governments only create 3% of the money supply, A, they don't have control of that money supply, and B, if they could create a really convenient mechanism for us to use actual cash to withdraw money from the bank and so to start using that as our transfer mechanism, they could issue a lot of these coins into existence, which might solve some of our debt problems right now.
Money is debt, a liability with the central banks, while digital currencies will be credit. We are witnessing a reset.
Is real. If we look at the deficit, the current deficit for this year in the US will be over 3 trillion.
Yeah.
That's 17% of GDP. We only had 1 year in which the deficit was larger. That was 1943. That was the Second World War. We see that 25% of US national debt was created in the last 12 months. We see that the Federal Reserve has to buy 3/4 of all US new debt being created. So there are not enough international investors anymore willing to support the US dollar. So I think this explains why the Federal Reserve understands that they need to bring the international monetary system with the dollar as anchor towards a new phase, and we need a new anchor.
The global banking system is going to change. The confidence in the dollar is being lost due to the debt. With digital currencies and a fundamental shift in the system, the debt can be lowered and the central banks can gain more control.
However, I think that the Bank of England is absolutely crazy not to see the opportunity here, because they could pay back huge amounts of the debt and increase their control of money supply by issuing some form of electronic currency, which effectively takes transactions away from bank transfers between banks.
Maybe this is why the Bank of England is a RippleNet customer.
Really positive for digital assets as a whole. There are certain rules that you have to abide by in order to gain access to the payment system, but the Federal Reserve has just put out the guidance for what those rules actually are.
The Fed is changing the rules and it's favorable for digital assets. Crypto has been on a boom-bust cycle since its inception. That happens with technologies that fundamentally change the world, like the railroad bubble.
Really isn't usage of cash in a lot of other countries, China, for example. So this is coming. Now, the question is, how will it look? I mean, if you look at electric cars 15 or 20 years ago, they were out there, but there's been a long relatively long ramp to the point where now it looks like it's going to go through enough of a scale.
They're mainstream.
They're mainstream, and you're going to have a tipping point, and it's coming. We're not there yet here, and part of the reason we're not there is because governments and central banks have not weighed in and said, here's what we're going to recommend and do.
Well, the Fed's starting to.
Because they can create winners and losers really by fiat when they decide how this is going to unfold. But we believe that digital currencies utilizing blockchain technology is a game changer. It is going to be the engine of commerce in so many ways going forward. So utilizing blockchain technology, digital currencies coming, but governments and central banks are going to weigh in, and they're going to have a major impact on exactly how this unfolds and what those investments, those early investments ultimately are worth.
At one point, the Fed is going to weigh in and pick winners.
It's not just a Ripple issue. This is an issue across fintech and crypto in general, if the U.S. wants to be number one. The problem in the U.S., again, it's not really a problem, but it's a complexity. We have 8 federal financial regulators, And we found, really tremendous kind of insight by most of them. The Federal Reserve has been fantastic.
We have all seen the connections between Goldman Sachs and the SEC. The commercial banks are doing whatever they can to stall this paradigm shift. The Fed has been fantastic because they realize the system needs to evolve to protect the dollar and the global economy.
So to get access to the payment system, historically, you have had to be a bank. A bank is defined under the relevant law as a depository institution. You have to be granted by statute the right to take US dollar deposits. And so trust companies, so a lot of folks in the crypto world deal with firms that are licensed as money transmitters or trust companies. There are no banks in the crypto world that can handle crypto right now. And so the money transmitters and trust companies are not depository institutions. They're not banks under that definition because they're not authorized to take US dollar deposits. Now, if you take US dollar deposits, you have to be able to clear those US dollars somehow through the Federal Reserve. And there are really two ways to do that. One is you go directly to the Federal Reserve, which is nirvana. And the other is you go through a third-party bank called a correspondent bank.
RippleNet and XRP bypass the traditional correspondent banking model.
The aha moment is we can now actually have US dollar clearing simultaneously with Bitcoin, Ether, other digital assets.
And all the small financial institutions and banks that partnered with Ripple can settle with XRP and simultaneously settle with the dollar. Keep busy. It's the cheapest kind of medicine there is. Dale Carnegie. Thank you for liking, watching, and subscribing. If you enjoy my work and wish to support my channel, please consider joining my Patreon.